It's been 2 years since a historic short squeeze took over Wall Street. Could another stock be poised to do the same? Here to talk about three stocks that could make good short squeeze candidates is MarketBeat analyst Chris Markoch. Chris, let's start off by just talking about what is a short squeeze.
A short squeeze it's an event that happens when you have a stock that's being heavily shorted, which you can usually notice by the short interest ratio on a stock. So when it's being heavily shorted, but the price goes up instead of down, and it usually goes up very quickly instead of going down. So that's creates the conditions for the short squeeze. The short buyers have to, or the short sellers, I should say, have to buy the stock at a higher price to cover their short positions.
And that's exactly what we saw a couple of years ago with
Yeah.
that historic GameStop short squeeze. I'll walk people through exactly what happened in that situation.
So you had many people that were shorting GameStop, which means they were making a bet that GameStop was going to go lower. But instead of going lower, through a confluence of a lot of circumstances, which don't have to be talked about here, the stock shot up and it shot up high. And then what happened was the short sellers had to start chasing the stock higher, and more people kept buying it, which meant more short sellers had to keep buying it. And it just took on a life of its own, and the momentum built, and it was an epic short squeeze right there.
For some people, a very profitable one,
Yes,
too.
very
Talk
much so.
about what these short squeezes can mean for investors.
If you are on the buy side of the trade, these can be enormously profitable because, again, if you bought GameStop, let's say when it was at, I don't even know, I think it started when it was like at $18, and if you bought it and it was at $25, and you just let it ride and it rode all the way up to wherever it got up to, yeah, you could stand to make a lot of money as long as you could get out of the stock before the stock price came back down. And that was the issue with GameStop, is some people didn't get out of the stock early enough, and then they wound up losing all of the gains that they had. That's where the risk comes in with the short squeeze.
So, what makes a stock like GameStop
Mhm.
poised to do this kind of short squeeze again in the future?
well, well, you would like to say that there's something that you can pinpoint and say this is why a short squeeze is going to happen. Ultimately, we're in an age where there's a lot of high speed trading. So, really, it becomes almost a trading event. And if traders decide, as happens a lot of times in some of these investing communities like Reddit and Wall Street Bets, if you get a lot of people who are actively trading in a stock at one period of time, it can cause a short squeeze. But sometimes it can happen because of events that happen. For example, a stock could get an unexpected upgrade, or you could see a stock that um, beats on earnings when it wasn't expected to, or they might have had a settlement of a lawsuit that went in their favor that wasn't supposed to happen. And all of those could have been creating interest on the short side, but now because the outcome was positive, it can cause people to jump in and buy the stock instead, which can then force those short sellers to buy the stock.
You have three stocks that
Yeah.
you think could be in this situation.
Mhm.
We're going to get to those picks in just a minute. But first, here's a tool you can use to track any stock in your portfolio.
Want to keep your finger on the pulse of the market? Text the word YouTube to 68285. That's 68285, and get free breaking news alerts from MarketBeat for the stocks that matter most to you. Don't miss out on crucial updates. Stay informed and stay ahead.
All right, Chris, let's get to your first pick of a
Sure.
stock that you think could potentially see a short squeeze.
So the first one I had in my article was C3 AI. This is a name that's familiar to a lot of investors in the AI space. Um, it's going through a similar issue to Nvidia, and I'm not comparing it to Nvidia, but I'm saying it's going through a similar issue in that it has delivered good quarterly earnings, but not as good as some analysts would like, and they've been cautious on their guidance. The issue with C3 AI is they're moving from a subscription based revenue model, which analysts have tended to love over the past few years because it guarantees that predictable revenue stream that everybody loves, to more of a consumption based approach. And right now, that's still in the early innings. It's still very tough to gauge how that's going to play out. However, the company is also taking some efficiency efforts to try to make themselves a profitable company, because they're not a profitable company yet. But all of this is which to say, if you have a few profitable quarters coming, or if they continue to beat revenue estimates, analysts still have a price target on the stock that's about 29% higher than where it's at right now. And this could be one that has the potential to go much higher and could be something where you don't want to be caught short on it.
Is there enough of a following for this AI stock? There's so many out there.
Yeah.
Is there kind of that fan following for this one?
Um, I don't know right now. It seems right now that there's more bearish sentiment on it than there's bullish sentiment. There seems to be some sort of, I would call it maybe an AI fatigue going on right now, and some investors are choosing their one or two stocks that they're going to invest in the AI circle. C3 AI may be on the outside of that right now, but for all the reasons I just said, it's one that investors may want to be looking at very carefully, especially since analysts have about a 29% upside on the stock.
Your second pick for a stock that could be a good short squeeze candidate is not in the AI realm, but it's a brand many people are familiar with.
Right, it's RH. Now, the company, the stock ticker is RH and the name of the company is RH, but many investors may know it better as Restoration Hardware. It's a premium supplier and manufacturer of home furnishings. So obviously, as you would expect, in 2020 and 2021, the company was doing very well. The stock was doing very well as people were buying houses, they were relocating, they were renovating the houses they did have. In fact, at one point, RH stock went up over $700 a share. Well, yeah, it's at 241 right now. So it's gone down significantly since then. And you would expect that for all of the reasons that we talked about now. The housing market is tighter. People who have looked to do renovations on their home have already done it. Others that might be looking to do larger renovations might be holding off, waiting for more favorable interest rates, waiting for inflation pressures to come down. That's where the opportunity may lie. We have a Federal Reserve that is likely to cut interest rates when they meet next week. That may not trickle down to consumers right away, but it is expected that if that happens, you might start seeing some loosening up in the housing markets. In any event, the stocks tend to precede the overall market by 6 to 9 months. So now might be an interesting time to get in on RH. And if that stock if the company does happen to improve their earnings outlook, because right now revenue is about at 2019 levels. So it's not too bad, and it's about where investors might expect to see it. The problem is that right now the company, their earnings have been negative because as a company, they're facing the pricing pressures that are coming from supply chains and inflation and all that. If that turns around, you could see the stock start moving up higher. And again, it might be an interesting short squeeze candidate.
Now, does every short squeeze have to happen with that fan following like we saw in GameStop, or can it happen by the kind of economic factors you just talked about?
Yeah, I think it can be either one. In fact, I think what made GameStop so unique was the fact that the short squeeze happened in absence of any real fundamental reason for it happening. It was sort of a mania. And again, that's not to judge it one way or the other. It's just to say it did happen without any fundamentals. Many short squeezes happen because of some fundamental catalyst. And it's also important to note that many short squeezes never get to the level where GameStop has, which is again what made GameStop so unique.
Well, let's get on to your third pick of a good short squeeze candidate. What's your final stock?
Okay, so the third one I'm not necessarily going to say is a good short squeeze candidate in terms of a stock that I would like to own, but it's one that I think investors might want to take a look at, and it's Beyond Meat. Now, Beyond Meat has had a terrible year. I think the stock is down 30% this year. It's down about 45% in the last 12 months. Short interest on this stock is a whopping 42%. That's a lot of people betting that this stock is going to go lower. And they could be right. One of the reasons for that, this isn't a critique of the plant-based meat industry. Plant-based foods are here to stay. Plant-based products are here to stay. And in fact, that's the actual issue that's going on with Beyond Meat, was when they came into the market, they didn't have a lot of competition. Now, unfortunately, even as plant-based products are getting more popularity, there's also a lot more competition in the space for Beyond Meat, and it's hard for them to stand out among that competition. However, the reason why I think it might be a short squeeze candidate is, again, you've got 42% short interest, so you get a lot of people that are betting the stock's going to go down. However, what it's looking like is, in the next 4 quarters, the company's going to have a lot easier comparisons on the top line. They just went through a year where they were having very difficult comparisons, where it was going to be very tough for them to beat revenue expectations from the prior year. This year should be a lot easier. That being said, the company's not profitable. I don't expect it to turn a profit this year, but just the fact that it could beat those top line estimates could be enough to convince people to jump in on the stock. And again, with that high of short interest, there could be a squeeze here with Beyond Meat.
How big of a squeeze would you think with the short interest you're talking about?
Well, I wouldn't, if I were an investor in Beyond Meat right now, it's trading around $6 a share. So it's just over penny stock territory. Actually, the analyst forecasts on MarketBeat are actually suggesting that the stock could still go lower. I don't think investors should be looking at this as being like a $15, $20 stock here. But I think if you were looking at the stock and said you could get it to $7, $8, $9, you're still looking at a very nice profit on that stock. And that's what I might be looking at if I were an investor.
Some great information and good stocks to look into. Thank you so much for the list, Chris. And thank you for joining us here at MarketBeat. Stay with us for more information on all the stocks in your portfolio. And as always, happy investing.